Hey everybody, today is April 19th and today we're going to talk about the price of Bitcoin. Over the weekend we had a flash crash of over 10% and right now Bitcoin is struggling to stay above these short-term moving average, and the question is, are we going to be able to continue higher, or is this going to be the end of the bull run and are we going to enter a bear market? Before we answer this question, please read this disclaimer and you can pause this video as you read it. Okay, so over the weekend we saw a pretty spectacular, very quick crash. And there's a lot of different reasons or speculations as to why this happened, but there's no definitive answer. So we're going to go over several possible reasons why we had a flash crash, right? The first is that there was a rumor going around that the U.S. Treasury was going to charge several financial institutions with money laundering, and so, but there's no confirmation yet, right? This is just rumors, so it's just fear, uncertainty, doubt, right? FUD spreading. And the second rumor was perhaps there was a massive China power outage that caused the hash rate to go down, because there's a large part of mining that's happening in China, right? They have the fair share of the mining distribution in the world, and so if there's a power outage, that's going to cause the hash rate to go down, and so the less that miners are keeping the network running, that's gonna affect the price, because Bitcoin's strength, the more miners that are actually keeping the network running, it's going to keep the hash rate up. And if the hash rate is up, that's going to make the network more secure. And that's going to make the cryptocurrency Bitcoin more valuable, right? But if there's an outage, then that's going to cause the hash rate to go down. And that's going to affect the price. So those were the two main rumors as to why Bitcoin went down. But I think that if you look at the technicals, there's also another reason, right? We talked about this many times in the previous videos, is that we've been very overbought. For the last 6 months, we've had 6 monthly green candles, right? And I talked about how even in the best bull market years, like 2017 and even 2013, we did have a monthly red candle every now and then, right? A bit of a pause in the rally, some profit taking. And that's very healthy, right? That's healthy for the uptrend, right? We had 2 candles here in May and June of 2013. And we also had a candle in March of 2017 and in September of 2017. So right now we haven't had a red candle in the last 6 months. And if you look at the history of Bitcoin, it's very rare that we have this many consecutive green candles in a row, right? The last time we had that many consecutive green candles was back in 2013. And so right now, it does look like this month is going to be a red month, and that's actually not a bad thing, because like I just said, it's good to have a bit of a pullback every now and then. I mean, just look at this is pretty much parabolic, right? Going straight up. So having a red candle month is not a bad thing. It's actually quite healthy, I think, for the remainder of the year to help keep the trend going up and not let it go up too quickly, too parabolic, because that can cause the price to crash and prematurely end this bull run, right? And let's look at the past. In the last 6 months, we've pretty much stayed above this short-term moving average, which is the silver line. So we did very well. And our first major correction was back in January, where we came down, but we still found support right over here. And then we came down again just last month, and we found support on the 50-day simple moving average. So this is our short-term moving average. So right now, we're in a critical moment, right? We're literally trending this moving average right now, and we need to close as high as possible above this line, and that's going to give us more conviction, more strength that this could possibly recover and push up higher, right? But for now, in the short term, we have to give benefit of doubt to the bears, just because this momentum is to the downside, right? And we talked about this in previous videos, how we've seen the MACD in a downtrend while the price of Bitcoin is in an uptrend, right? And the same thing with the RSI. We've seen the RSI in a downtrend for many months now while the price is going up, and that's a bearish divergence, and that means that the momentum on the upside, the buying pressure, is starting to slow down even though the price is going up. And that usually means that sooner or later we're going to see a strong break to the downside if we don't have enough buyers step in and keep this volume going up. So you can see that the volume has been dipping. See this gold line? That's the trend of the volume. It's been going down even though the price has been going up. So there's not enough buying strength to keep this trend going. So we definitely need more buyers to step in. So where could we look for going forward, right? in my opinion, we need to hold this moving average. We talked about how we held this average over this bull run over the last 6 months, right? And every time we come down and test it, we bounce strongly above it. So at the very short term, we have to at least hold this 50-day simple moving average, which right now is about $56,000. If we fail to hold this, our second level of defense is this goal line, which is the 100-day simple moving average. That's going to be our midterm support level. And right now that's at $49,000. But this doesn't necessarily mean it's going to go straight down. It could go sideways for a while and go down. So as time moves forward, this could actually end up moving up, and we can see the price come down and perhaps bounce off of it, right? But that's our second line of defense. Our third line of defense is our Fibonacci level at 47,000, right? And really, in the bigger picture, we want to hold 50,000, right? 49 to 50,000. Why? Because our previous low is right here. When we bounce off this 50-day simple moving average, our short-term support, this is 50,000, right? If we start to break below, we're going to start making lower lows and lower highs, right? Right now, we do have a higher high, technically, over here. And we have higher lows, obviously. Higher lows and higher highs. However, if we start to make lower lows and lower highs, like we go below and break below 50,000, that's going to cause a change in the direction of the trend. That's going to cause a bearish trend. And at that point, we're going to have to start to give benefit of doubt to the bears that this is going to go down lower, right? So what we need to see is a strong break to the upside. We need to hold this support level, 50-day simple moving average, right? We need to hold 56,000, and we need to see strong buying volume coming in, right? We need to push these oscillators up and stop this downtrend. We need to push the oscillators up, right? We want to see the MACD histogram move up, print green candles, right? We need to see more strength, more buying pressure, more momentum to the upside, right? We need to stop this downtrend. Start making higher lows, higher highs on the RSI. Because right now, there's just not enough buying pressure to keep the price up. And we're kind of just moving sideways. We're moving sideways for a while. And like we said, when we made this pattern, we talked about in a previous video that we created this triangle pattern, right? And for a brief moment, we actually broke above the triangle. And I was like, wow, this is great, you know? And when we came back, we had a pullback, and we actually held this triangle. We bounced off the support, and I was like, wow, this is great. But unfortunately, we rolled over, and now we've actually broken below the triangle, which is bearish, right? So at this point, unless we are able to break above this triangle and continue higher, we have to give benefit of doubt to the bears, right? However, just because in the short term I am bearish doesn't mean that in the long term I'm bearish, right? I still think that if we zoom out, we're on the daily chart, right? We are still higher lows and higher highs. We still have a lot of positive catalysts coming forward. A lot of positive fundamentals have occurred over the last 6 months, you know, from institutions buying Bitcoin and holding it on their balance sheets to companies like PayPal or Tesla accepting cryptocurrencies as payment, right? And I think that we're going to see much more of that going into the rest of the year, and that's going to give us more fundamental catalysts, positive catalysts to push the price higher. Now, on a technical level, obviously, we have to at least hold the 56,000 level, which is the short-term simple moving average, like we have here and over here. I think that we can do it. And I think the best case scenario is that we move up and perhaps go sideways for a while. And keep in mind, in our last video, I talked about how every time we hit these Fibonacci resistance or support levels, they usually end up as strong resistance level or support levels, right? Like when we came down here and we bounced off this support level on the Fibonacci line, or we came up here and we found resistance along this Fibonacci resistance area, or even here on the support level, right? Now we're hitting resistance level. So it's not out of the norm to see us struggling to break above this level, right? But I've predicted that the longer we move sideways in this channel, the more energy we're going to store, right? And I also said this in a previous video that Bitcoin going sideways is not necessarily a bad thing, because that creates energy, stored energy, and like a spring, eventually it'll uncoil and explode higher, like this year-long coil over here, exploding higher. So going sideways is not necessarily a bad thing. It could, as long as we have buyers coming in and absorbing all the downtrends, right? And taking supply off the market, just absorbing the supply, eventually that demand is going to outstrip the supply, and it's going to cause the price to go a lot higher. Now, moving forward, let's talk about the Pi cycle top indicator, right? In our last video, we talked about how the Pi cycle top indicator was about to crossing, and we actually had a cross last Tuesday. Now, this indicator predicts within 3 days, right? Within 3 days that the price of Bitcoin the trend will start to reverse to either a short-term correction like we had in April to summer of 2013, or a bear market like we did the last two times in December of 2017 and 2013, right? This cross, you can see on the dotted line where it crossed, led to a reversal in the trend. Now this cross happened last Tuesday, and within 3 days was last Friday. So our last Friday's video, I talked about how this weekend was really crucial because we want to see the price of Bitcoin hold last Friday's level. We don't want to see it roll over, because within 3 days, this cross predicts, the Pi Cycle Top Indicator cross predicts that we're going to start to see a change in the trend to the bearish side, right? Unfortunately, that's what happened. Over the weekend, we saw a pullback, right? But the good news is that we had actual reasons, right? We talked about the potential power outage in China. We talked about potential crackdowns on U.S. financial institutions. So it's not like it's a technical thing where it's a completely technical thing where there's no catalyst or fundamental catalyst bringing this price down, right? So I still think that there's enough positive news that can come in to push the price up higher. And also today we had surprising news from China. They basically said that they're starting to change their stance on cryptocurrencies. They're starting to see it as an alternative asset rather than something that is dangerous, volatile, and it should be banned, right? Because China has a history of like trying to ban Bitcoin and cryptocurrencies, but at the same time, like, they're allowing mining. They know that cryptocurrencies can be like one of those major industries in the future, and you get the idea that like they don't want to completely ban cryptocurrencies because they don't want to be like, it's like banning the internet. Like they don't want to be left behind, right? They don't want the U.S. to get stronger because the U.S. is going to probably embrace cryptocurrencies going forward. Of course, there's always going to be some regulation, but they don't want to be left behind. So that's more positive fundamentals that can push the price higher, right? But the question is this Pi Cycle Top Indicator starting to predict the crash, right? Is this over? Are we going to enter a bear market? In my opinion, no, right? I talked about this in the last video, how if you look at in the past, when the Pi Cycle Indicator has crossed, we've seen like a lot of dotted lines, right? A lot of dotted lines. That means the price was a lot higher than where these lines cross, meaning that there was a lot more FOMO, a lot more irrational exuberance, like a lot of people just rushing in to buy Bitcoin, right? People's mother and their grandmother saying they want to buy Bitcoin. People who have absolutely no idea about cryptocurrencies, but they're seeing their friends get rich. Right now, we don't have that. We've been consolidating for like the last couple months, so we only seen 2 dotted lines. So even though this line is crossing, I don't think it necessarily means that we're going to see this transition to a bear market. Worst case scenario, we'll probably see a bit of a pullback like we are right now, but I think we're going to hold at least our first 3 lines of defense, right? At the very least, I think that if we can hold the 56,000 level, which is this short-term moving average like we've held over the last 6 months, and strong bounce in January and in March, I think we're gonna go a lot higher. We might go sideways for a while before we explode higher, but that's not necessarily a bad thing. That could be a good opportunity to buy, you know? Of course, you gotta make your own decisions, but that's just something that I personally will probably do if we hold this level, right? If we do break below, again, just summarizing, our next level is 49,000, and if we don't hold that, then of course this Fibonacci level is our, in my opinion, last line of defense before we start to turn bearish, right? But I do think we're going to hold. I think we're going to hold that because, like we just went over the news articles last week, there's just a lot of positive fundamental catalysts that are coming into the crypto space moving forward, and I think that we're going to hear a lot more, and I think that's going to get people excited and they want to invest more in cryptocurrencies. But I think in the short term, on the technical level, seeing a bit of a pullback is not necessarily a bad thing, right? Just to summarize again, 6 green candles, monthly candles in a row. Having 1 red candle is not a bad thing, right? Again. And also, before I forget, let's look at the dollar, right? We talked about how in the past, we wanted to see the dollar come down because in all the years where the dollar is up, let's look at the weekly chart, right? When the dollar, we talked about how this pattern earlier this year, it looked like very reminiscent of the 2018, right? Where we saw a huge spike in the dollar. And even then, look at 2014, right? We saw a huge spike in 2014. Every time we saw a spike in the dollar, 2014, 2018, Bitcoin was in a bear market, right? Yes. So here, 2014 and 2018, Bitcoin was in a bear market every time we saw strength in the dollar. And when the dollar came down in 2017, like over here, 2017, the dollar came down, right? Huge plunge in the dollar. 2017, and in 2013, the dollar, it did go up, but then it plunged near the end of the year, right? And what happened in the end of the year in 2013? And what happened in 2017 when the dollar plunged? We saw a huge movement, right? When the dollar moved up mid-2013, we saw Bitcoin come down, but when the dollar fell again in late 2013, we saw a huge push up in the Bitcoin price. All throughout 2017, we just saw the dollar came down over that year, and we saw a huge spike in Bitcoin. So this is another reason why I'm hopeful that Bitcoin will continue to go up for the rest of the year towards 100,000 and more. Originally I thought that this thing was going to continue higher and perhaps put downward pressure on Bitcoin, but the fact that it's rolling over now, right, and forming a bit of a a bull trap, right? It's rolling over now, and if we continue to go lower and we actually break lower, see how this is sort of like a multi-year support level, right, around 90. If we continue to roll over and go down, I think Bitcoin will find more momentum to the upside, and this sideways action is going to be just a temporary stop, just like we had some sideways action here before the breakout. And on a larger scale, sideways action here, or if you want to look very multi-year scale here, it's huge multi-year sideways pattern giving us energy to push up higher, right? We've seen this before, Bitcoin moving sideways all of 2015, finding momentum to go up, right? So moving sideways is not necessarily a bad thing. And I suspect that even if Bitcoin is able to hold this 50-day simple moving average around 56,000, we will likely continue to move sideways and facing support resistance level around this Fibonacci resistance level. But eventually, I think that we're going to find the strength to push higher to $100,000 and beyond, right? But of course, we need to hold this level first, the $56,000 level or the 50-day simple moving average level. But we'll update you again on Wednesday, and hopefully we'll see what the price will do going forward. Hopefully we'll be able to hold this level. If not, then of course we have these other two support levels down at the 100-day simple moving average, and of course at 47,000, which is our Fibonacci support level. I think that if we do come down, we should be able to hold just like we held over here at this Fibonacci support level, and here this Fibonacci support level. However, of course, if we don't, then the trend will start to look bearish. But hopefully we're able to hold at least the 50-day simple moving average and push up higher. But of course, I'll update you again on Wednesday and see how the price action develops, and we can go on from there. Thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. Thanks again, and I appreciate your support. Have a great day.